I scanned through the 100 largest companies listed in the UK, searching for those that had two key traits. They've raised their dividends every year for the past decade and seen their stock price rise over the last 5 years. Out of those 100, only 11 companies met both criteria. Consistently increasing dividends is often a strong signal of a company's financial resilience and commitment to rewarding shareholders. To show how this plays out over time, let's explore a basic example. Say you invested 1,000 in Company X 5 years ago, with shares priced at 1 each and a 5p annual dividend. That's a 5% yield. Fast forward to today, the share price has climbed to 1.60, and the dividend is now 8p per share. While a new investor would still see a 5% yield based on today's price, your yield on cost is now 8%. That's the power of dividend growth. You earn more from the same investment. For instance, the average current yield on my own portfolio is 3.2%. But because I've been investing in dividend growers for years, my yield on cost is much higher, sitting at 5.8%. That means I'm earning more from what I originally invested. But dividends aren't everything. We also want share prices to go up. That's why these 11 companies in the FTSE 100 stand out. They not only increase dividends, but also reward shareholders with capital growth. Let's explore them one by one. 11.HALMA. With a 131-year legacy, Halma focuses on safety technologies, fire detection, and medical devices. The yield is 0.8%, but they've increased dividends for over 25 straight years. Back in 2006, the dividend was 7p per share. Today, it's 22p. The share price has grown 16x. A 1,000 investment 5 years ago is now worth 10. Scottish Mortgage Investment Trust. This trust invests in innovative global companies. The dividend yield is 0.5%, raised consistently for over 25 years. The stock has climbed 38% in 5 years. That 1,000 investment, it's now 1410. 9. British American Tobacco. A global tobacco powerhouse offering a 7.4% dividend yield that's been rising for over 25 years. An accounting change caused a visual blip in their payout history, but the increase remains steady. The share price rose 8.2% in 5 years. 1,000 invested would now be worth 14.55. 8. United Utilities. The UK's largest listed water utility. With a 4.5% yield and 13 years of dividend growth, it's a reliable pick. Its share price is up 24% in 5 years. Reinvesting dividends, your 1,000 becomes 14.91. 7. London Stock Exchange Group. A major provider of global financial data and infrastructure. The yield is modest at 1.2%, but it's been increasing for 15 years. Shares are up 48%. Reinvested, your 1,000 grows to 15.49. 6. FNC Investment Trust. A diversified trust with exposure to top US tech stocks like Nvidia and Amazon. The 1.5% yield has grown for 25 years. The stock is up 64%. A 1,000 investment 5 years ago would now be worth 17.48. 5. Sage Group. The UK's second largest tech firm, Sage provides enterprise software to over 6 million users. Its 1.6% dividend has grown for 25 years. Shares have surged 96% in 5 years, turning 1,000 into 2018. 4. Coca-Cola HBC. A Swiss-based bottler for Coca-Cola, operating in 28 countries. With a 2.2% yield and 12 years of growth, its stock is up 100% in 5 years. Reinvested dividends push a 1,000 investment to 2,220. 3. Relx. A global data analytics and publishing firm serving over 180 countries. Its 1.5% yield has risen 14 years straight. The share price climbed 122% over 5 years. Your 1,000 grows to 2,362. 2. Diploma plc. You might not know this firm, but it provides niche products like medical instruments and seals. The 1.5% dividend has grown for 25 years. Shares are up 129%. That initial 1,000 would now be worth 2,425. 1. Bay Systems. the UK's largest manufacturer and Europe's top defense contractor. With a 1.9% yield and 21 years of dividend increases, its share price has soared 248% in 5 years. A 1,000 investment would now be a staggering 3.747. Of course, past performance isn't a crystal ball. Markets change, but these companies have proven their resilience over time. Now, if you prefer a more hands-off approach, consider FTSE 100 ETF. While investing in individual stocks involves risk, an ETF spreads that risk. For example, a typical FTSE 100 ETF returns 67% over 5 years with dividends reinvested, turning 1,000 into 1,670. Here's a quick recap. All 11 companies have raised their dividends for at least 10 consecutive years and delivered stock price growth. That's a strong combo for any long-term investor. For full transparency, I personally hold shares in several of these companies. You can check out my full portfolio, which I've built over 16 years, in this video right here. Thanks for watching Profit Powerhouse. If this video brought you value, please like, share, and hit that subscribe button so you never miss our deep dives into smart investing strategies.